Hey guys, how are you? Happy Friday. We just put a post up about the what makes up a credit score. That video is live now on our YouTube channel. You could definitely log into our YouTube channel, subscribe, check it out. But why I'm doing this video is so funny that my 130 consultation is a real life situation of that video that we just posted. So I'll bring you guys on a consultation so you can listen to the consultation so you can hear what we're talking about. Of course, we have a solution to it, but I wanted you guys to hear what I'm talking about in retrospective to that video that we posted. A lot of you guys may have this situation on your credit where you're missing one component in order to get a perfect credit score. And we can address that for you as well, but you're here a real life consultation on this call. All right, Ms. Pascal, I'm back now. So you're able to see all three credit score, correct?
Yes. So those are my credit scores?
Well, yeah, they're not that bad, but we have an issue on this report. Click on the print button, but don't print the report. Just click on the print button because I wanted to open a bigger screen for you so you can see everything in a bigger view.
Okay. Okay.
All right, and this is what your score navigator reports look like, and this is the real-time report for all three bureaus, okay?
Okay.
Let me just save this report in your file. So I know you had a question yesterday. How long will you have to keep Score Navigator open? For your case, it's only going to be about 60 to 90 days. That's it.
Okay.
However, for this case, you should have a credit monitoring site in place, like Score Navigator, for the rest of your financial future, because you need to know exactly what's going on with your credit at all times. Right? And as I'm assuming you're young, you're new to credit, so you want to make sure you're able to monitor your credit and keep a solid profile and a healthy profile so you know what's going on with your credit at all times.
Right.
All right, perfect. Now, you open a new screen, correct? You see your TransUnion 678, Experian 676, Equifax 676. Those are your Vantage score. Now, Score Navigator provides Vantage, but everyone hears about FICO, right? Like my FICO, what's your FICO score? That's the terminology that's used in the credit space. There's two scoring models, Vantage and FICO. Somewhere down the line this year, most banks are going to be transferring over to Vantage scoring, but I'm just going to tell you what the FICO is so you know what your FICO score is, and that's the score we're going to be building out. So in the FICO world, your score is 676. Sorry, 676, that's your FICO score. In the Vantage score, these are the three scores to the bureau. So these are the scores we're going to be working on building out for you, okay?
Okay.
Have any questions about that?
Yeah, how do I have credit when I don't have a credit card?
You know, it's only based off your student loan. That's all you have on this credit report, student loans. That's the issue we have. So we just did a video about this. It's so funny, ironic that your consultation is to them. We did a video a couple of days ago about the two components that makes up a credit score, which everyone needs to have. You only have one. Out of that one, it's technically a half of a portion of what you need to build your credit score. You don't have any auto loans. You have no open credit cards, nothing. So we have to rebuild this credit because that's just now a few minutes ago I asked you if you applied for a credit card, you got denied. You said you never applied for a credit card, but if you did apply for a credit card, you will get denied because you have insufficient credit history.
Okay.
All right. Name, everything looks good?
Yes.
Address looks good?
Yes.
All right, 1 second here. You're 22, right? 22, 23?
Yes. I'm 22.
22, okay, perfect. All right, so now looking at your credit score, your credit report, are you finished with college or are you still in college?
I graduated in May.
Oh, okay, perfect. Congrats. All right, so your student loans, let me ask you something. First off, you only have student loans on your credit report. That's all you have.
Okay.
Right, and so student loans, credit is built on two things, revolving and installment. Installments are like loans, auto loans, mortgages. Your student loans do count, but they're not a full component to build a score because you can defer these loans over and over and over. All right. Now, your total student loans comes out to $26,000. Have you started making any payments on that?
No.
Are you in a payment deferment plan, or is it in the 6 months from graduating?
To be honest with you, I don't know. Like, I'm not sure. I don't even know how to pay it.
Do you get statements from Department of Education for your student loans?
if I do, then it would be in the mail.
Do you check the mail?
No. So that's the thing.
Okay.
I probably do though.
So here's the thing. When did you graduate?
In May.
Last year, 23?
Yeah.
Your payment started on February 2024. You're lucky they haven't reported you late.
Okay.
You're so lucky because if they reported you late, this score would have been dropped down to the 500s.
Gotcha.
And your score is only based off of these open student loans that you have. So your student loan is from Department of Education. You need to reach out to Department of Education and go on a payment plan. Your monthly payment right now is $58, but you do not want to pay $58 a month because of the interest. This is a high interest loan. You want to pay like $150, so 90% of that payment is going to principal, not only interest.
Right.
Now your student loans you took out was $5,500. Now you're $5,581. So it starts accumulating interest. So this is something you need to address immediately to make sure you're in a proper payment plan and you're not missing payments and it doesn't get reported negatively on your credit report. Now, as far as buying a house, which came back to the conversation we had earlier about renting versus buying, you are not in the position to buy a house. You have to rent for the first year to build this credit up, and I'm not sure how your income is, but obviously you have to build that up as well. But you have to have both. So your credit only has student loans on there. And again, if you apply for credit cards, now if you apply for this in the credit card world, there is something called prime and subprime credit cards. So technically, your report, you have a clean credit report, right? It's like a baby credit report. So you have the opportunity to build it the right way and maintain it the right way. Just like, like your dad, you could ask him about that. Because we did his credit. So you have the opportunity to build it the right way. Now in the subprime world, even if you have no credit, you can apply for a Credit One, Capital One, First Premier credit card, and you will get those credit cards. But the limits will be $500, and the interest is like 24.9%. You don't want those kind of credit cards on this report. Since you have a clean report, you want to keep this report with prime credit cards. What I mean by that is Chase, Citi, TD, Chase, Citi, Discover, American Express, those kind of cards where you have interest rates about 8-9%. You have a limit of $10,000. And you have travel rewards, perks, and all that good stuff that comes with those cards, like Chase Sapphire and all that, Discover and so forth. So,
what about Bank of America?
Bank of America, that's it's a regular bank, but yes, you can apply for a credit card with them. I don't suggest Bank of America. I'm not a fan of their banking practices. I think Citi and Chase are better banks.
Okay.
And one too often, Chase one too many times, Bank of America and Wells Fargo has been in the news for a lot of consumer data breaches. I don't think you want to be at a bank where your data gets breached, or the bank gets breached and your data ends up in the dark web, where that's not where you want to be at.
Right.
So, there's a lot of education here. We have to teach you about credit, but we got to start with baby steps here, 'cause there's a lot to learn.
Right.
I mean, I'm just basing off of that, based off of and it's okay that you don't know where your student loans are or where you have to pay them, but you have to have a vested interest in it, because you don't want it to mess up your credit. Because if you're trying to buy a house next year and you mess up on your student loans, you can't buy a house for 24 months.
Right, I got you.
So the more mess up that you allow, the longer it takes to buy a house, the longer you're gonna be renting.
Right.
Okay. So this credit, we have to rebuild this credit for you, where you can apply for a credit card and start building the credit in time. We're in March. You said, excuse me, you said in June you want to buy a home? In June you want to rent. Is that what you said?
In July, I would like to rent.
That's perfect timing. You'll be able to make that happen in July. Or we will be able to make that happen for you in July. By July, I should say. So we could definitely get that done and hit that date for you. Also, if you're going to be renting and you're renting from a corporation, they look for 3 to 4 times what the rent is in income.
Right.
Just so you know that. So if it's you and your boyfriend, it's combined.
Gotcha.
Typically, they look for a 720 credit score in order to make the approval process easy and not ask for additional documents.
Gotcha.
So with that being said, the 720 is where you want to be at for a comfort zone to make it an easy, smooth transition. At a 720 credit score or higher, all the utilities that you put in your name, you will also not have to do additional deposits. It'll be signed and like get activated.
Okay.
Okay. Do you have an auto loan? Do you drive?
I have a license, but I don't drive. No,
Do you have any intentions of purchasing a car?
not anytime soon.
Okay. Okay. So that'll be the second component that's needed, like an auto loan. Obviously not a mortgage because you don't have that yet, but like an auto loan would also, you'll need to do something like that down the line to keep the score high. Okay. But for now, we're gonna use the student loan portion of it to fill in the blanks to build this credit score. Give me 1 second here. I'm just make a note of something, and then I'll be right back. All right, guys. So that was the conversation I had with the client. Just want to share that conversation with you guys. It's real. This client seen it on her phone, but I was very surprised that the client don't know where the student loans are, who she has to pay, don't open the mails. You heard that, and those are little things that you guys need to pay attention to. If not, that could be a disaster. That's a recipe for your score to be dropped. Not being responsible with the mail and so forth. So we're gonna continue the conversation. We're gonna put the plan together to build her credit. We're gonna get her first credit card, and now she'll be ready to get her apartment in July, like she said. And obviously, we recommend she works with a realtor if she's gonna rent from a corporation. And that's just the gist of the story. If you have any questions, comment about the score, drop it below. I'll try to answer it for you guys. Talk to you soon.